Disclaimer. By proceeding past this disclaimer in the video, you agree to adhere to the following. Advice I hear in this video is accurate at the time it was recorded. Tax laws change frequently, and I agree to research on my own if I choose to adhere to the video's advice. If I so choose to adhere to the advice, I understand it is at my own risk, and I am unable to seek any sort of legal action against this channel and/or its owner. I also understand this video is meant to be informative and that the channel owner is posting this advice out of the kindness in his heart. Regards, the Gaming CPA. Hey everyone, welcome back to Blue Bob's, the Gaming CPA's channel. Today, we're actually going to give you a little bit of tax advice and a potential tax saving advantage that you and really anyone can take advantage of. It seems minor, but at the same time, in the end, it can actually save you potentially a good amount of money, and it can definitely save you taxes. Now, obviously you heard the disclaimer before. This does not apply to every single person, as every single person's financial status might be different. You might be someone who has $40,000 sitting in your bank account. You might be someone that has $40 sitting in your bank account. So again, this tax advantage, although it is good, may not be able to apply to you specifically. And if you have any questions, please feel free to shoot me an email at bluebobs.twitch@gmail.com. Without further ado, let's start talking about HSAs, or health savings accounts as they are called. Now, an HSA or health savings account is an IRS declared account that you are able to contribute in, and you may withdraw the funds later tax-free if they are withdrawn to pay for medical expenses. Now, that can also include your dental and I believe possibly even vision. So again, these are funds that you contribute. They earn interest. While they're earning interest, when you withdraw those funds and pay for the appropriate expenses that they are qualified to pay for, it is all tax-free. Now, another benefit is the funds that are contributed into the HSA are also contributed pre-tax. Now, what do I mean by pre-tax? Let's say you work and you earn $50,000 from an employer. All right, you earn $50,000. What I mean by pre-tax is your W-2, if you just work and make $50,000, is going to show $50,000 as wages, tips, or other compensation. Now, let's say that through your employer, you choose to have $3,000 deferred into an HSA. Now, on your W-2, it's actually going to say $47,000 was made, even though you technically made $50,000, because $3,000 of it is getting deferred to an HSA pre-tax. Now, let's break it down a little bit more for you as far as what the tax saving implications can be. If you take the $50,000 and let's just say you were going to get taxed at an effective tax rate of 20%. Okay, this is not obviously the current tax rate or effective tax rate, but let's just for simplicity say it was 20%. Your total tax would be $10,000 for the year. That is not good. All right. Now, let's say that instead you chose to defer $3,000, all right, into a medical expense HSA, all right, a health savings account. Your new taxable income is going to then be $47,000. And again, this is all ignoring deductions, ignoring everything. If this was your total AGI or your total taxable income of $50,000, now $47,000 at 20%, you're now going to pay $9,400, which that HSA deferral saved you $600. Okay, and the great thing is you will still be able to use that money later on to pay for potential medical expenses. You might break an arm, you might need to go to a hospital, you might do what I did, get some fancy Invisalign that costs $6,000. Well, if you contribute into your HSA, you can then use the money to pay for that. And that is done with tax-free money, basically. So that is another benefit, a huge benefit of the HSA is really if you have the funds available to make the contributions into it. Now, there are contribution limits. So for 2020, the contribution limit, if you are on self-only coverage, and it must be a high deductible health plan. All right, it must be a high deductible health plan. All right, huge asterisks all over the page. There are certain rules to creating an HSA that allows it to be valid, and the high deductible health plan is what it must be, because the reason is you have to pay a lot of deductible before you start to kick in the insurance. And so the reason why the IRS is allowing you to be tax-free is, let's say you were a little more wealthy and you were able to get a low deductible health plan because you could afford those premiums. They don't want to give that person the HSA benefit, because if you're wealthy enough to necessarily afford the low deductible, or you're in that situation, they don't want you to also get the tax benefit of having the HSA with tax-free money. So it must be a high deductible health plan. And the contribution limits for 2020, if you are self-only coverage, meaning you are the only person covered under the plan, is $30,550 for 2020. If you are a family covered plan with your high deductible health insurance plan, then that is going to be $7,100, basically double. So you can contribute up to that amount every year, and it normally increases a little bit. And if you max that out, let's say in 5 years you have 20 some $1,000 saved or more if you do the family plan. And it's nice to just have that because let's say an emergency happens, you then have funds that you can pull. Or let's say your kid might need braces down the end, or he might need Invisalign. No offense, but let's say your kid's born and his teeth are a little crooked like mine were. They were atrocious. You can just start plugging away $1,000 for 5 years. And then once your kid turns a certain age and they're ready for the process, then you can do it. That's another smart way to do it. So again, health savings accounts, HSA, a great way, and it's available for everyone. Okay, it's available for you probably. And another benefit that I'm not going to go into, but especially if you are a Schedule C individual or potentially an S corp, all right, there are even more benefits from doing an HSA with a spouse or with kids. So thank you guys so much for watching Blue Bob's The Gaming CPA's channel. If you have any tax questions, again, bluebobs.twitch.com. Don't forget to leave a like on the video so that way more people can see it and become aware of it. Also, don't forget to hit the subscribe button and the notification bell as well so you get notified when I go live or post more videos like this. If you have any requests for videos, please let me know down in the comment section down below. And until next time, y'all, maximize those deductions and pay less in taxes. Have a wonderful day.